Okay, let's get into this. When I say 7-Eleven, what pops into your head?
Well, for most people here in the States, right, it's probably Slurpees.
Slurpees, yeah, maybe that hot dog roller thing. A quick stop.
Exactly. But here's the thing that's kind of wild. If you say 7-Eleven in Japan,
Totally different picture, I gather.
oh, completely. You're thinking like gourmet onigiri, rice balls, really good ramen, sometimes even stuff from famous restaurants they collaborate with.
It's like a whole other universe for convenience stores.
It really is.
Mm.
And we're talking about a massive company here, world's largest convenience chain.
Over 13,000 stores just in North America.
Yep, and pulling in, what was it, over $72 billion in sales last year. Huge numbers.
And now they're trying to bring some of that Japanese magic, that inspiration over here to the American stores. That's the big story, right?
That's the huge undertaking you're on right now. It's a massive shift.
Absolutely. And, our mission here is to really unpack why this big change. What does it mean for, like, the economics of the whole convenience store game?
Because historically, these places made their money from, well, smokes and gas mostly.
Right. Tobacco and gasoline? But cigarette sales.
Steadily declining.
Yeah.
And with electric cars coming on strong.
Gas sales are expected to slow down, too. Makes sense.
So 7-Eleven's basically in this race, strategically, to find other ways to make money. Sustainable ways.
And they're landing on food. Doubling down hard on food.
It's not just tweaking things either. This is like a fundamental rethink of their business model.
Yeah, it sounds like they're trying to change their whole identity almost.
Moving away from just being the quick stop for gas and smokes.
And trying to become a place you'd actually go for food. A food destination.
Driven by these big market shifts, yeah.
Okay, so to really get why this is happening and how big a deal it is, we need to dip into a bit of 7-Eleven history that I think most people don't know.
Ah, yeah, the ownership piece.
Exactly. You think of it as like this classic American brand, and it did start here.
Sure did. Texas originally.
But it actually went bankrupt twice.
Yeah, once way back in the Depression, 32, I think. And then again in 1990. Too much debt.
And the kicker is, who owns it now?
Not an American company. It's Japanese. Seven & I Holdings.
Which is kind of mind-blowing when you first hear it. How did that happen?
Well, a big Japanese supermarket chain, Ito Yokado, they bought a majority stake.
Okay.
And the really key part is Ito Yokado had already been running 7-Eleven stores in Japan for like over 10 years before they bought the U.S. parent company.
Ah, so they already knew the brand and they had their own successful way of doing things.
Exactly. They weren't just investors. They came in with a proven playbook, a totally different operational philosophy ready to go. They saw the potential, but also the need for a big overhaul.
So when these Japanese owners take over, what did they see? What was their immediate take on the American 7-Eleven way of operating?
They saw pretty quickly that the U.S. side, both corporate and the franchisees, had some serious catching up to do.
Patching up in what way?
The core thing was data, or the lack of sophisticated use of it in the U.S. stores at the time. The Japanese model was just, as they put it, a lot more data-driven.
Meaning
They tracked everything, what sold, when it sold, down to the time of day, even broke it down by gender and age of the buyer.
Wow. To do what? To help with ordering?
Precisely. All that data fed directly into ordering decisions. Compared to that, the American system was, well, pretty basic back then.
And this difference showed up in how the stores actually ran, right? Like the physical operation.
Oh, big time. You had U.S. stores, often bigger, usually hooked onto a gas station.
Right, the typical model we see.
And they were getting maybe 2 deliveries a week.
Just 2.
For everything.
Yeah. And get this, some U.S. operators found that 40% of the stuff on their shelves sold less than 1 item per month.
40%, that's staggering. Just dead inventory sitting there.
Exactly, tying up space, tying up cash. Meanwhile, in Japan,
Let me guess. Different story.
totally different. Their stores didn't even sell gas, but they had this huge variety of fresh food. Okay.
And they only stocked stuff that moved fast. Crucially, they had their own distribution system.
Their own trucks and logistics.
Yep. And it made multiple deliveries every single day to the stores.
Multiple times a day.
Wow. And the orders weren't generic. They were customized for each store based on all that data we talked about. Sales trends, local demographics, even the weather forecast for the day.
A weather forecast influencing the 7-Eleven order. That's intense.
It's a world away from just getting 2 trucks a week and hoping for the best, right?
Absolutely. You can just imagine the difference in freshness and, well, efficiency. So faced with that gap, how has the U.S. side tried to, catch up?
They've definitely been working on it. They've rolled out their own distribution system now,
Okay.
which allows the franchisees, the store owners, to place orders every day.
Daily ordering, that's a big step up from twice a week.
Huge. And those orders are guided by company recommendations, what's hot nationally or regionally, but also combined with the store's own specific sales data.
Getting smarter. And this ties into that Japanese concept you mentioned, Tanpin.
Campaign Conry. Yeah. It's sort of their core philosophy for retail operations.
And what does it mean practically?
It basically means item by item management, really tailoring the product mix, the assortment, to the specific needs of the customers at that location.
So localization.
Exactly.
Yeah.
You balance the core stuff everyone expects at a 7-Eleven, the national brands.
Right. You need your Cokes and Doritos.
Sure. But you balance that with items that are just right for that store. Maybe it's near offices, so you need more quick lunches.
Or in a residential area, maybe more snacks for families or, I don't know, milk.
Precisely. It's about getting that local mix right. And that's super important when you're talking about food, especially fresh food.
Makes sense. You can't have a one-size-fits-all approach for food.
No way. And this focus on localized food is building on a pretty big base already. American 7-Eleven isn't starting from zero with food.
Right. They do sell a lot of stuff already.
A ton. Over $17 billion in food and beverages last year. That was about 24% of their total sales.
Wow, 17 billion. What does that broke down to?
Well, think about this. 315 million cups of coffee,
That's a lot of coffee.
153 million Slurpees, still iconic,
Okay.
and 99 million slices of pizza.
Okay, so they have a huge existing food business, even if it's maybe not the gourmet image yet.
Exactly, a massive footprint to build on.
But they want more. I saw this goal they have, aiming for 1/3 of sales from their own store brand stuff, including food, next year.
Yeah, 1/3. That's up from less than a quarter back in 2022. It's a pretty big leap they're aiming for.
Is that just about, making more profit per item because it's store brand? Or is there more to it?
Well, higher margins on store brands definitely don't hurt. But the strategy runs deeper. It's that core shift we talked about.
Away from gas and tobacco?
Exactly. Gas is low margin anyway and faces long-term risk from EVs. Tobacco is profitable, sure, but it's a declining market.
But food. People always need to eat.
Food demand isn't going anywhere. So they're making a strategic bet, moving away from those historically important but fading categories.
And going all in on fresh food, immediate consumption. Betting on stomach share, basically.
That's a good way to put it. Stomach share over gas tank share. It's a
Yeah.
fundamental pivot.
Okay, so if they're going to hit that ambitious food goal, what are they actually doing to make better food, different food? How are they upgrading things?
They're putting serious money into production. Right now, they have 17 of these central kitchens, they call them commissaries, scattered around the U.S.
Making sandwiches, salads, that kind of thing.
Yeah, prepping food for the stores in their region. But they're upgrading these places. And they've brought in help from Japan,
Ah, bringing in the experts.
partnering with a company called Warabeya. They're a major supplier for 7-Eleven in Japan. Knows the system inside out.
So Warabeya is helping set up new, better facilities here.
Exactly. Warabeya's got new factories. Hawaii, Texas, Virginia are mentioned. And these aren't just for making more sandwiches.
What's different about them?
They're designed for a wider, more localized range of food. They have capability to, cook large amounts of rice properly, handle new kinds of proteins.
Which lets them make different stuff.
Stuff you really wouldn't expect from a U.S. 7-Eleven today. Like spicy miso ramen soup is an example they give.
Ramen from 7-Eleven. Okay, that definitely challenges the hot dog perception we started with.
Right. It shows the level of ambition. They want to offer genuine, decent meal options, not just snacks.
But, okay, here's the challenge, isn't it? How do you get people like me who think Slurpees to suddenly think ramen when they see a 7-Eleven? How do they change decades of perception?
That's the multi-billion-dollar question, isn't it? And part of the answer, again, comes back to data.
Using data not just for ordering, but for changing customer habits.
Exactly. It's about understanding and tapping into what they call the immediate consumption mindset.
Okay, unpack that. What does that mean?
It means people walking into a convenience store are often looking for something right now. An immediate need, an impulse.
A quick coffee, a snack, something they forgot.
Right. And 7-Eleven has this just massive data operation to understand those impulses. Remember that loyalty program?
The one with 95 million members.
Yeah. Okay, so that gives them incredible insight. Not just what people buy, but who's buying it, demographics when they buy it, what else they buy with it. It's a gold mine.
A gold mine for understanding those immediate needs.
And for potentially shaping them.
How so? What are they doing with those insights?
Well, one big push is targeted advertising inside the store.
Like on screens?
Yeah. Screens, TVs placed strategically around the store, showing specific messages at specific times.
Tailored messages. Give me an example.
Okay, so maybe in the morning, the screen near the coffee machine shows an ad suggesting, grabbing a hot coffee and a fresh donut.
Makes sense. Trying to trigger that impulse buy.
Exactly.
Go.
Or later in the day, maybe near the cold drinks, an ad pops up suggesting a specific snack and beverage combo.
And using the data to know what combinations are popular or what they want to push.
Right. It's about influencing that decision right at the point of purchase based on those data patterns.
It's smart. But does it risk feeling a bit creepy or just like too much advertising?
That's the balancing act for sure. They want it to feel relevant and helpful, not intrusive or overwhelming. Time will tell how well they strike that balance.
And what about people who aren't even walking into the store? Is there a plan there?
Oh, yeah. Delivery. That's huge for them.
They deliver, like groceries and stuff.
Yeah. Food, drinks, essentials. And they say it's the fastest growing part of their business right now.
Really? Why is it growing so fast?
Well, convenience, obviously. But also, it's apparently quite profitable for them.
More profitable than someone walking in?
Seems so. Because the average delivery order tends to be for about double the amount someone spends inside the store. People order more when they're getting it delivered.
Interesting. So delivery expands their reach and boosts the average sale.
Exactly. And it all ties back to their kind of long-standing philosophy, which they state as, what's the customer want? Where do we think they're going? And how do we meet them where they're going?
So delivery and data-driven impulse buys are ways of meeting customers where they are, or where 7-Eleven thinks they're headed.
Precisely. It's all part of this integrated strategy to become more central to people's daily routines, especially around food.
It's a bold vision, definitely redefining what convenience means. But for the average person, isn't convenience still mostly about like speed and simplicity, in and out, fast?
That's definitely still a core part of it.
Are they risking maybe overcomplicating things for some customers by trying to be a food destination and a quick stop?
That's the potential challenge, right? Expanding the definition of convenience without losing the core appeal. They want convenience for a meal, convenience for a quality snack, not just convenience for gas and a soda.
So moving beyond just being quick to being quick and offering something substantial, something appealing.
Yeah, integrating themselves more deeply into your day, ideally.
Okay, so we've really covered a lot here, from 7-Eleven's surprising American roots and its Japanese ownership,
To this huge strategic pivot driven by declining gas and tobacco sales.
towards becoming this data-driven, food-focused operation, taking direct inspiration and even suppliers from Japan.
Leveraging global insights to try and completely reinvent the local corner store, basically.
Which brings us to the big question for you listening right now. Will this work? Will American customers actually start thinking of 7-Eleven for, say, ramen or quality rice balls? Will we embrace convenience store food the way they do in Asia?
And maybe the bar isn't even that high. Maybe even capturing a little bit of that excitement, shifting perceptions just somewhat, would be a huge win for 7-Eleven's massive bet.
Yeah, will even a little bit be enough to call this reinvention a success? It's something to think about.
And perhaps consider, how this whole thing might change your view of the humble convenience store next time you walk past one. It really shows how these big global business shifts can ripple down and potentially change everyday experiences and expectations right here.